Hi, everyone. Welcome. I'm Lily, and I'm part of the marketing team here at Velosio. And I want to thank you for joining us for today's webinar, Microsoft Dynamics 365 Business Central Tax Updates for 2025 with Michelle Tallada from Avalara. Before we get started, I do need to cover a few housekeeping details. You may have noticed that you're currently on mute, but don't worry, you can still interact with us by submitting any questions using the question box located on the GoToWebinar panel. If you happen to run into any technical issues during the session, feel free to reach out to us using that same question box and we'll assist you as soon as possible. We will try our best to address any of your questions during the presentation, but if we happen to run out of time, don't worry, our team will follow up with you via email or you can connect with your Velocio account manager for further details. All right, let's get started. I'm excited to announce Michelle Tallada, who will be leading today's session. Thanks for joining us. Thanks for joining us, Michelle. I'm going to let you take it away from here.
All right. Thank you so much, Lily. I really appreciate it, and I am excited to be here. So I'm sure some of you have probably seen my face before. I work closely with Velosio. Here at Avalara, I am a sales executive on our Microsoft team. I've been with Avalara going on 3 years in the world of tax and compliance, over 10 years now. And I was a high school English teacher for 11 years before that. So my goal is really to make sure that you have the information that you need in order to be successful and compliant. So quick agenda for y'all for today's call. We are going to talk about some tax updates, and that's where we're going to focus. There are a lot of things that happened in 2024 and things that you want to be aware of that are trending for 2025. And then we'll speak briefly about how Avalara can help support you on some of those things. So let's go ahead and dive in. When we think about the challenges that businesses face when it comes to tax compliance, they're really driven from a constantly evolving and expanding commerce industry. Governments reacting with aggressive policies that are really highly complex, and tax compliance becoming more and more digitalized. And what that really means for you as an organization is that managing and staying on top of compliance requires ever greater resources and expertise. And quite frankly, most businesses just are not going to have those resources or that expertise or maybe even the time to manage all of that effectively. So I want to jump in with some of the things that are really super complex. So first is economic nexus and really simplifying it. A lot of what is driving sales tax compliance is Nexus. So when it comes to Nexus, we're usually in the past, we always thought about physical Nexus, people, places, things, right? I've got inventory, I've got employees, remote employees, a location. Maybe I'm doing business in on site, attending trade shows, those types of things. That's all physical Nexus, and that can definitely impact your tax profile and footprint. But with the South Dakota versus Wayfair back in 2018, it opened up the world of economic nexus, right? Adding additional layers of complexity, additional reasons that you could trigger an obligation in a state. And what's especially challenging about that is even 5 years later, economic nexus is still evolving. So we've got several states that have updated their threshold limits. So it's not just that these thresholds and these rules have been set, but they keep changing, and that's what makes it really complex. Now, some of the changes are actually working in favor of businesses. A lot of businesses, the trend has been, or states, the trend has been to get rid of the transaction threshold. So in several states, it was not only revenue that would determine your obligation, but also the number of transactions or invoices in that particular state. So Indiana, Wyoming, and Alaska really removing those transaction thresholds, just focusing on the revenue to make it easier for states that are doing business or companies that are doing business in their state, but maybe perhaps are not located in their state. So again, Indiana, Wyoming, they removed those in 2024, those transaction thresholds. Alaska is removing it as of obviously this month, January 2025. Now, Alaska, as you might know, does not have a state sales tax, but they do have those local sales taxes. So be careful on that one. I'm actually going to circle back to that later in our broadcast. New Jersey, again, following that trend, is actually seeking to remove their transaction threshold as well. So more to come on that. This is a clearer picture of a more updated map as far as what economic nexus thresholds look like across the United States. Some are as high as $500,000, like California, Texas, New York. But most of them are going to be at about $100,000. Again, some are going to have that transaction threshold still, but it can be an either or scenario, right? There are going to be some that you're either hitting the 200 transactions or the $100,000 in revenue, and that'll trigger Nexus. In some states, like Connecticut, for example, it needs to be $100,000 and 200 transactions. The same goes for New York. Their threshold, though, is higher at 500,000. So again, clear picture. The most important thing to think about here is they are changing. They are not all the same, and you really do need to know the rules for not only economic nexus, but physical nexus as well, because there are a lot of nuances with physical nexus in every state that you might be doing business in. So any kind of sales in a state, be aware of what those thresholds and those nexus obligations look like. All right. So I do want to highlight a couple of other things. I did mention Alaska. There's no sales tax in the state of Alaska at the state level, but they do have those local jurisdictions that do have local sales tax that you need to be aware of. There are other states, we call these home rule states. So they're states where local governments have the authority to administer their own sales and use tax. So in a nutshell, what that means is typically you are going to be collecting both state and local sales tax and remitting it all to the state. The state then divvies it up to the local entities. However, the local authorities. In those home rule states, it's your responsibility as a business to not only calculate and collect for both the state and local, but to remit individually, right? So you have to remit the state tax to the state, and then you have to remit the local sales tax to those local jurisdictions. So Colorado, Alabama, Louisiana, those are examples of home rule states. There are a handful of home rule states. It's really important that you don't miss those local sales and use tax rates and the remittance of those, because you can have liability like the case I have up here with Wayfair again. Go figure, Wayfair was sued at the local level as well. So definitely something to be aware of. Make sure you're taking that into consideration. Another thing that you want to think about when it comes to taxing appropriately from a sales tax perspective is sourcing rules. So, where it's being shipped, if it's shipped, it's an in-state to in-state transaction versus an in-state, or, you're shipping across state lines, that's going to potentially change the taxability, how that tax rate is calculated. There are some states that are trying to make that a little bit easier. So Illinois, January 1st of this year, they aimed to really simplify that by going with destination sourcing rules. So pay attention again, not only to your Nexus piece, but also to those sourcing rules when you're thinking about tax calculations. All right, movers and shakers on the 2024 ballot. So this just gives you a quick glance at some of the things that popped up, not only sales tax, but property tax related as well. North Dakota voters really rejected a property tax bill that would have banned property tax based on assessed values. In South Dakota, we've got grocery tax. They voted against a measure to repeal grocery taxes. So those grocery taxes are going to stay in place for South Dakota for the moment. In Oregon, no sales tax, but they denied a measure that would have actually imposed a corporate minimum tax on gross sales. And then Nashville voters did actually approve raising the Davidson County sales tax rate to 9.75% in order to fund transit. So again, being aware, there are generally thousands of tax rate changes in the course of 1 year. So being on top of those tax rate changes is going to be really important for you to be accurate. What you did last year may not be the same rates as this year. One other one I'll share with you, there was some tax reform in Louisiana. So House Bill 10 in Louisiana was passed to raise the state sales tax from 5.45% to 5%. Beginning January 1st of this month, right, earlier this year. They actually had originally had a plan to drop the sales tax rate in July, but with this new House Bill 10, they actually raised it. and they will drop it slightly come 2030, but not, the initial anticipated drop that was initially planned. One other thing with Louisiana, I'm talking a little bit about digital goods later, but they did also pass to extend their sales and use tax to digital products as well. So a little bit of a change there if you're operating in the state of Louisiana. Retail delivery fees, big topic of conversation over the past couple years. Colorado, really kicking it off. It was aimed to, for Amazon delivery, Uber Eats, DoorDash, right? That's what it was aimed at originally, but really doesn't end there. It's not leveled on commercial carriers like FedEx and UPS, but it's really targeting last minute specialty delivery, really trying to combat the decline in the gas tax revenue because of electric cars. Colorado has significant exemptions. They increased their fee in 2024. Minnesota also then imposed a fee in 2024, 50 cents on retail deliveries. Significant exemptions there, but something to definitely be aware of. It could actually result in double taxation because of the fuel excise tax as well. So, just kind of keeping that in mind in both of those states. But just like anything else related to sales tax, when one or two states does it, everybody else is kind of waiting to see how it pans out. And other states are considering it as well. So there's always that domino effect that could happen. There are 6 other states that are really looking at retail delivery fees. So Maryland, Nebraska, Nevada, New York, Ohio, and Washington are all considering adding retail delivery fees in the near future. I did include a link. You'll get these slides afterwards, but I included a link to the Washington Legislature Joint Transportation Committee. They published a report that really shows the effect of what that retail delivery fee could look like. And so if you want more information about that, definitely click on that and take a look, as well as some links there on Colorado and Minnesota specifically. So I come back to digital goods. I did bring it up for Louisiana. Just as more and more of our business tends to be digital, tends to be online, that market is changing, and really states are trying to wrap their arms around that potential lost revenue, right? Is there a way that they can get a piece of that? So we're really looking and tracking streaming services and digital goods and what taxation on those look like. So cities in California are proposing to expand utility user tax to include streaming services. Massachusetts and New York both introduced bills in 2024 to tax streaming. So look for more of that to come from different states as more and more streaming services, are out there, and they, again, really want to get their arms around that revenue. As for the rest of the digital goods and services, I mentioned Louisiana really extending their sales tax to digital products, and that does include digital audio and visual books, digital applications, games. Georgia also started taxing select digital products as well last year, so make sure you update your taxability on those if you're selling into Georgia. Michigan did add some guidance on NFTs. That's another one to watch as well, how states are treating NFTs. They did offer some additional guidance in late summer of last year. And then Vermont is enacting a new bill to include pre-written computer software, so SaaS, in its definition of tangible personal property. And again, that was in 2024. So definite changes. Digital products, software as a service, software of any kind has a lot of varied tax complexity. And if you need more information on that, I am happy to provide it. We've got lots of resources when it comes to taxability on software and digital goods. Use tax is another piece. So use tax can often be so much more complex than sales tax. And there are a couple ways that you can get yourself into trouble. So I share this particular case with you. Again, it's a South Dakota case, but it's Ellison Drainage, Inc., a Minnesota-based infrastructure company who did business in the state of South Dakota over the course of several years. And they were found liable for $75,000 in unpaid use tax. Essentially, they were doing work on site in South Dakota, bringing equipment into the state for those projects. Sometimes the equipment could be there for an extended period of time. Sometimes it might only be there for one day. The state of South Dakota did audit them, did find them liable for that $75,000 in unpaid use tax. Ellison did fight the case, obviously. It went all the way to the Supreme Court in South Dakota, and they lost. They did try to appeal it to the U.S. Supreme Court, and the U.S. Supreme Court did deny that review in October of last year. So, all of that being said, be careful when you're performing any kind of activity in any other state. It's important, obviously, to know the tax rules in your home states and where you have locations. But if you are going on site, if you are doing any kind of activity in those other states, really be aware of what the rules are in those states, because you may see an impact, not only in how it might impact your Nexus profile and where you might need to register and start collecting from a sales tax perspective, but it may also impact you on the use tax side. So know your obligations, be very aware of that, and proactive as you are, accepting contracts or bidding on things or doing projects in other states. And one last update I want to share with you, e-invoicing. So if you're not familiar with e-invoicing, it's really the obligation, and we're seeing it just growing and growing across the world. It is a major trend. It's where the government in a particular country is going to require a business to send all invoices electronically to their customers, as well as, in most cases, to the authorities within that country as well. So the goal is to really transparency from a business standpoint, to reduce a lot of the nonsense that's going on with money laundering and some illegal activities. And again, really trying to make sure that they are capturing their revenue. So again, we're seeing it. It's increasing across the world. There are over 80 countries that have e-invoicing mandates, and we anticipate more to come. So for example, the UK has launched a consultation on e-invoicing. So they are looking at how they might apply that in Britain. Germany is enacting theirs as of January 1. You must be able to receive e-invoices as a business. So again, it's not only about sending, but receiving. Poland, France, they do have e-invoicing mandates. They actually just postponed them slightly. So they were due to go into effect last year, and they did postpone them to 2026. But again, that's not that far out. Saudi Arabia is beginning to enforce theirs, 2025. And Estonia as well, right? Looking at those for 2027. So again, it was supposed to be enacted this year. They're kind of delaying that slightly to accommodate businesses. If you are selling internationally, if you have international entities, if you're thinking about growth through acquisition that might include an international entity, e-invoicing needs to be on your radar. You want to make sure that you are thinking about it and that you are proactive. It is not something that you're just going to get a solution in overnight. So you really want to be proactive as far as exploring what your obligations are going to look like, not only from VAT calculation and where you need to get registered, but also that e-invoicing piece may be super impactful to your business. There are talks about it coming to the US as well. So when we think about trends that we're watching, Avalara, that's right at the top of the list of things that we're really keeping our eye on, just due to the fact that it is growing significantly. All right, so how can Avalara help, right? All of this is complex, confusing, it's ever changing. That's really why Avalara was created. So Avalara was created to alleviate the burden of tax compliance, essentially to make tax less taxing and more relaxing, if you've ever seen one of our commercials. As the leader in the sales tax industry, we're really supporting over 41,000 customers with every aspect of their sales tax compliance journey, both in the US and globally in over 75 different countries. And we're really able to do that through our deep integrations. We've got over 1,200 different integrations to various platforms, from ERP to POS to e-commerce. One thing to note about Avalara is that our tax engine was created in the cloud over 20 years ago. And the first integration that we did was actually GP. And we've really grown that relationship with Microsoft over those past 20 years. And we've been refining that same tax engine for over 20 years. So it's not old or band-aided technology that we're trying to bring up to speed. We've been refining that same tax engine. So no band-aids here. Some other things to think about, again, that relationship with Microsoft. We started with GP, but we've grown that relationship with Microsoft to not only include legacy platforms, but cloud services like D365, really making sure that we're staying ahead of all of their updates and continuing to build and enhance those integrations. All of our top 10 connectors, I mentioned over 1,200 of our top 10 connectors, GP, Business Central, and D365 Finance are right in that top 10. So these integrations plus our breadth of services, really our goal is to be a one-stop shop for all organizations with flexibility to really support you through growth and change. So I'm going to give you a big picture of Avalara's products and services, and we have a lot. But not all businesses need all things. So I want to give you kind of a big picture overview, and then I'll delve in a little bit as we go. So big picture overview, your business is really engaged in both purchases and sales. And our products are really designed to support both sides of that equation. So that's really the beauty of Avalara. We've got a product that'll support both the sales side and the purchasing side. And we can help you with everything from licenses, registration, classification of products for duties and tariffs, 1099s, W-9s, and IRS-related forms. And we can even support things like property tax. At our core, across the top, that's really that tax automation. So helping you to track not only your exempt sales, but do those tax calculations, the tax determination. Does tax need to be applied? If so, what's the correct rate? Getting that back into your systems, fully integrating with your tech stack, and then getting the reporting and the remittance done. And even again, as I mentioned, that e-invoicing if that's a need. And we really, again, do that through that deep integration that we have, not only with Microsoft, but as I mentioned, over 1,200 different platforms. So clearly you want to integrate likely with your ERP system because that's where you're doing a lot of your billing and credits and invoices. But you may also need it in your CRM when you're doing quoting, or you've got a POS system, or you're selling online, right? So you need it integrated with your e-commerce site. And that's, again, the beauty of Avalara is that you have that flexibility to add on different connectors so that you can really have it where you need to have it. In addition, we offer lots of different services, from partnering with the Streamlined Sales Tax Organization to helping you with risk assessments to determine your Nexus, and obviously implementation, support, training. One important thing for you to know, it's an added benefit for you as a client of Velosio, is that Velosio is also certified to implement Avalara's services. So as a partner of Avalara, we've trained some of the folks at Velosio to be able to handle the setup of the key functionality for you. So you can get all of the benefits of Avalara, and you can work with your Velosio contacts to get that set up appropriately within the systems that they are already very familiar with. In addition, there are some services as well that are what we would call managed services that would allow you to fully outsource to Avalara. So not only are we providing tools and software, but that additional layer of support if needed, right? You may not feel like you need that, but if needed, we can fully outsource things like the management of exemption certificates, the returns piece, even license management for business licenses, certifications, permits, those types of things. Okay, so I want to think about you're closing 2024, you're in the thick of it, or hopefully maybe you're already done, and then you're really already into 25, but probably are maybe still looking at how to best prepare for 2025 and even into 2026. There are some immediate solutions that we can help you with, and then I want to kind of think about the future. So first and foremost, there are some ways that we can help you to simplify and to support you in the immediate without you having to get into any kind of implementation process. So really quickly, you're in the 1099 season, right? This is the time when you're trying to get all of your 1099s done, and we can help you with that. So we can help you with collecting and managing those W-9s. We can do automatic TIN verifications, track all of that for you, and then have it automatically flow over into creating those 1099s, pre-populating those forms from that 1099 data, and really simplifying the distribution process of the 1099s by e-filing them and getting those over to your 1099 vendors. So a really simple, straightforward process. There's no implementation required for this component. You can get it up and running within a matter of a few hours or a couple days, depending on your own bandwidth. Fairly inexpensive as well, and offering a 30% discount. Again, for anyone who's interested in this piece, the 1099 piece, obviously, you're probably trying to get that done right now, but that W9 component, again, automating that piece can really help you to stay ahead of the game throughout the course of 2025, so that 2026, you've got everything automatically flowing over to those 1099s, making that even simpler. So don't wait until next year to get a 1099 solution in place. You really want to start with the W9s and the collection of those, and doing that throughout the year to make your process a lot easier. The other thing that's an immediate source of help for most organizations is Avalara Tax Research. So the goal of Avalara Tax Research is really to keep you compliant and save you time. You probably spend an enormous amount of time making sure that you're staying up on all of these tax changes, making sure that you know what the rates are, or that you understand the taxability or your Nexus footprint. Avalara Tax Research is a tool that really can give all of that to you in a nice, easy to search database. So we provide to you a comprehensive database of all of our tax research and easy to understand explanations. We support it with all of the legal documentation, and we even give you the ability to ask our tax team questions. So you get direct access to the tax team, direct access to all of the tax research, keeping you compliant and saving you time. In addition to that, you get direct access to tax rates, so you can easily look up tax rates. So if you're not ready for full automation and you need something to help you right away, tax research is a great opportunity to be able to get easy access. And if you are going with a manual process, to have a little bit of support to that manual process. For those of you that are looking for automation, tax research is still great as well, because it's going to give you those tools to help avoid billable hours and going to other resources and spending that time online just trying to formulate your tax policy. Automation is great, but you need to have a tax policy to automate in order to do it well. Again, offering a discount to Velosio clients as well, if that's something that you're interested in. Next step is really going to be charting your course for the future. So in order to really chart your course well, you want to make sure that you understand your obligations and your Nexus footprint. And if anything's changed, right? So just because you go to the doctor once and you do some blood work doesn't mean you never go back and you never do blood work again. So you want to think about Nexus as something that is constantly changing and you need to keep an eye on. So if you haven't done a Nexus study recently, again, a lot of things have changed with Nexus, so that may mean your Nexus footprint has changed as well, as the rules have changed or as your business has changed. You really want to think about a Nexus study, and then you also want to start thinking about automation. As I mentioned earlier, it's becoming increasingly difficult to maintain this without some sort of automation in place. So it's not something that you jump into really quickly. You do need time to evaluate that and have some good conversations. You want to be thinking about that early so that you can make a proper plan. So when you're thinking about a Nexus study, again, it's always good as you close out 2024 to consider how your Nexus footprint might have been impacted by the business that you did in the prior year. So understanding whether you've triggered Nexus in any new states, if there's any liability or exposure there that you might have. And then if you do have some states that you should have been registered in or you have some liability in, really understanding what are your options and what's the potential best path forward for you in order to resolve that past obligation so that you can ultimately be registered appropriately and eliminate any risk that you might have so that you can feel comfortable in your compliance going forward. So I would consider a Nexus study as kind of an annual thing, but if you haven't done one in a while or you've never done one, then you definitely want to get something like that done so that you have a clear picture of where your company's at and if you're not missing anything. Avalara can help you with that. For a lot of folks, I start with a high-level overview of their data and I kind of point out some potential red flags. But if you want to go in deeper and do a true Nexus study, we do offer a 1-year look back. Typically, that's $4,500. It's very high level, but it will give you some really solid information. But for Velosio, we are offering clients of Velosio that $4,500 professional Nexus study at no cost. So huge savings to you and some really solid information. If you want to go in even deeper into that and you haven't done one ever, or you haven't done one in a very long time, or your business has changed significantly, you may want to consider what we call the premium Nexus study. And that's really going to be a 5-year look back. It's going to be much more in-depth and detailed and really give you a clear picture of what your true liability is, because Nexus can go back multiple years. In any case, we are going to give you some recommendations on how to move forward and get compliant, and we can help you with those pieces as well. So even voluntary disclosures, if you're really looking to take advantage of programs that are out there to limit your potential liability, interest, etc. So we can help you with all of those pieces as needed. Or when it comes to automation and making a good plan to move forward and implementing that automation. So once you make that choice, once you understand your profile and your Nexus and what your needs are, you can implement a solution to make that process easier for you in the future. Really looking to drive efficiency and reduce your risk. So take those tactical things off of your plate that are taking so much time to stay on top of in order to be compliant, allowing you to focus on other more important things and be more efficient. And then also, again, the more you automate, you're reducing that risk for the organization. And hopefully then it makes you rest a little easier, sleep better and relax at night, that you are staying compliant. So when it comes to the automation piece, Avalara is, really the go-to when it comes to automating sales tax. There are 3 main components or pillars in the sales tax automation process. First is really thinking about your exempt sales and managing those. So obtaining those documents, making sure you're obtaining the right exemption certificates early enough so that you have them at the time of sale. Our tool can help you with requesting and obtaining and validating those documents, turning that paper to digital, storing those appropriately, and then it can make it part of that tax determination process. So connecting to our AvaTax engine, so taking the systems that you currently use today and connecting them to our AvaTax tax engine can really extend the value of the investment that you've made in your tech stack, right? Functionality. So those systems, once they are connected via API to AvaTax, it's going to send that transactional data over to us that we need to make a tax determination. Like, does tax need to be applied? Do we have an exemption certificate on file looking back at that exemption module? And if it does need to be applied, what's the correct tax rate based on the taxability of the product or service, the sourcing rules, as I mentioned earlier, and then sending it back to the system that it came from. So you're not really having to leave the system, right? So if you're in Business Central, all of that can be done on the back end and the tax pops right back into Business Central. Happens in less than a second, nanosecond. And then storing all of that information for filing and remittance, right? So Avalara can handle all of that for you, pre-populating all of your returns for you, giving you access for approval and visibility, and then go ahead and file and remit, as well as handling notices for you as well. So that's generally what we think about when we think about tax automation. Now, not all businesses need all 3 components. So really having a good conversation, understanding what your needs are and how each of those pieces may positively impact you, as well as the cost, is really what you should be considering and making a plan for, when you might be able to feasibly put something like that in place based on your bandwidth and your budget. One other thing I want to just kind of say about the integration piece. A lot of people have the question, hey, I've got multiple channels, right? I've got an e-commerce site, I've got an ERP system that does billing. Can all of that be integrated into one? Yes, that's one of the beauties of Avalara. You have one tax engine, so it's really giving you a single source of truth for all of your compliance data. It eliminates any kind of need for recalculation or duplicate transactions, so you're really cutting that down. Tracks everything in one system for you, so all of your liabilities are going to be there. So we can pull one lump sum at the each month for anything that's due across any of the different states. Um, Applying consistent tax rates, that's super important. You don't want different tax rates in your ERP than what you have on, say, your e-commerce site. You want to make sure that that's consistent. Also tracking your economic nexus, right? Nexus is determined by your total sales for most states. So a lot of states are going to include exempt sales in those thresholds. So you don't want to only be looking at the sales in, say, your e-commerce site, and not considering the sales that are coming out of your ERP for, those exempt or wholesale pieces, because it's not going to give you a true picture. And then you're going to feel like, hey, I'm registered appropriately, and you're going to get hit with a really bad audit. So really making sure that all of your revenue is flowing into one place for, again, not only that single source for compliance, but for tracking your nexus as well. Helping you to make sure that those returns are automated, your nexus is tracked appropriately, just really makes your quote to cash process a lot smoother. When it comes to Microsoft, again, we have that strong relationship with Microsoft for over 20 years. We've got over 1,700 Dynamics customers that we work with today and multiple connectors. Again, I mentioned legacy as well as D365 Business Central, finance. So when you're in the Microsoft ecosystem, feel confident that you would be covered with Avalara. And even if that tech stack changes or shifts or grows or over the course of your business, it's very easy to swap out connectors as needed depending on how that tech stack changes. So the goal really is to integrate as seamlessly as possible so that you can be compliant, reducing risk and increasing efficiencies wherever possible, but again, being able to really scale that as your business changes. Business Central specifically, I did want to highlight because within each of those connectors is so much additional functionality. So it's not only about doing the tax calculation, but again, it's really extending the investment that you've made in your platforms by adding additional functionality to those platforms. So Business Central, for example, not only can you integrate from an AvaTax standpoint for tax determination and calculation, but right within Business Central, it can support you with accounts payable. It can support you with customs duty and tariff calculations or estimates. It can support you on VAT calculations. So again, it's not just in the US, but globally as well. And then even things like exemption certificates, really being able to manage those right from Business Central without having to go to an outside, platform or source. And then, of course, the returns. So there's lots of additional functionality in there. We do have some functionality that's coming on e-invoicing as well for Business Central. So stay tuned for that. There'll be additional enhancements. We're continuing to work on that connector. And that's kind of all I have today. Keep in mind, again, tax laws are always changing. It's super difficult, but we are here to support you in whatever way you might need, wherever you are in your tax journey. Again, I work very closely with Velosio, so I'll be your main point of contact if you have any questions or if there's any way that we can support you. I did want to take a minute. I'm going to throw it back over to you, Lily, and see if there were any questions that popped into the chat while I was sharing. And I'm also, before I do that, I want to switch the screen. I'm just going to kind of leave this up while we check on any questions. There is a QR code there if you do want to take advantage of that free risk assessment, the Nexus study that I mentioned, as well as my contact information if you want to reach out to me specifically with any questions that you might have. But Lily, back to you. Any questions in the chat?
I'm not seeing any as of right now, but if we get any popping up while I am sending us all off, I will include that in our emails with those answers. But thank you, Michelle. That was great. And thank you to everyone who joined us today. We appreciate your time. Before we head out, I do want to remind you to keep an eye on your email inbox for a follow up email. which will have a link to the webinar recording as well as the link to the PowerPoint slides. Looks like we still don't have any questions. So with that, I'm going to go ahead and sign this off. Have a great day, everyone. Thank
All
you.
right, have a great day, everyone. Bye.